Welcome. Good morning, everybody.
Good morning, everybody.
Yes, that's right. Friday. Say goodbye, and I say hello. Isn't that something? I don't know if that's the theme song of President Trump's administration, but it's beginning to show a pattern. And welcome to this morning's segment of the pre-market briefing. Here's the deal. We have what we discussed yesterday. First and foremost on your screen, we're using TradeStation today. We have to kick off a couple things as we end the week. The Dow component came into what I would, as you can see, this blue line is the quarterly pivot. We didn't quite get there, obviously, for the NASDAQ, and what we were looking for the S&Ps was maybe get down into the area, the average of the lows. Not the absolute low, but the average of the low. We had a low up there, low down here, the average of the lows. So that's one of the things we were targeting. In the not too far past, the budget was passed, and it's going to be sent to a bill to President Trump to sign. So with that stated, what we had seen was a breakdown on an intraday last conditional change. We thought we would see some follow-through. We got the follow-through, and now the market's back up. So is this a buying the dip and taking profits? I did a little quick video yesterday, and I think that still is a resonated theme. And even though, and I want to bring this up to everyone's attention, even though the market looks pretty dismal at this point, and we did break down the advanced decline, as I pointed out in yesterday's video, if you had a chance to watch that, it wasn't on really heavy volume. So even though the indicators suggested we would get follow through because we had a breakdown of the advanced decline, it wasn't on heavy volume, so there was a chance that we would see follow through weakness. It happened overnight, so there it is. So what does that mean? I definitely don't think that this is an opportunity to get short here. If anything, it's an opportunity if anyone took advantage of this week's advisory service. The couple themes that we were looking at was the Russell should outperform the broad-based indices, and it did. It declined less than from peak to trough, meaning in the Russell IWM, that's the peak and that's the trough. In the Qs, that's the peak and that's the trough. We started the week off with wanting to be bearish and take a look at buying inverse ETFs on the Qs. SQQQ, SQQQ is the inverse, and again the QID. Lower QIDs. That's what we wrote about this week, gang. We also put out a couple option strategies. So not only did we say we want to be looking for positions in SOXS, the semiconductors, QID, SQ, also take a look at some option strategies that could take advantage of that, especially one of which was a vertical bear put spread, which actually got filled. If you had orders in there, you would have been filled on Wednesday. So now what do you do with that? I think this is an opportunity to come out of those trades as we did get follow through weakness. Now, what does the stock market look like as we are currently? Let's take a look at my radar screen, and you can see a couple things that I want to focus in on for this weekend. Is first and foremost, I want to focus on stocks if there is buying opportunity and if this was an intermittent low. Remember, we come in the month of March, in like a lion, out like a lamb. And in the next week or so, as we get through, again, next week is Holy Week. So I'm not sure we're going to see a whole lot of volatility next week from a global scale. This is a major holiday. So families will be taking off. Traders will be taking off. Not here, but anywhere there's a Christian nation that celebrates Easter. It is a massive, and of course, let's not forget Passover. And so this is a major Holy Week that I think we're going to start to, as we get towards the end of the quarter, we can see some rough patches. There's two things that you want to focus, as we will discuss Monday morning's briefing. But first and foremost, you're going to see some illiquid possible conditions as we get past through Wednesday. It's also the end of the quarter, so there's quarterly window adjustments. Is this something that people might want to be picking up some deals? We've got several different markets to take a look at. What I'm going to be focusing on for this week are sectors that are still seasonally strong, that are in weekly buy mode, according to my radar screen analysis. Weekly trend, either the person's pivots still contain a bullish bias on the pivots. That would be the weekly blue versus gold moving average concept. I'm looking for stocks that are in weekly PPS buy mode. Now, perhaps they're in a daily downtrend. So there's three considerations. What am I looking for? Well, this is VMware. It's in a weekly sell signal. It's in a daily sell mode. And VMware does not meet that criteria. So what the criteria I'm going to be focusing on are stocks that are in a weekly buy that may be generating daily buys. Now, I'm not suggesting let's go out and get Groupon, but what I would be looking for is a kind of a consideration like this, where we get and Groupon could be a consideration. By the way, I mean, it's not a stock I would want to trade after. It's under $5, but let's say that we get a consideration of a stock that has A, the relative strength is improving, the person's market catcher. B, the volume is appreciating, showing accumulation. In fact, this actually shows more of a kind of a basing action in the short term, which could get maybe a pop up to 520, something like that in the next week or so. We're going to watch how this closes the week. So what I'm more interested in are stocks that have a weekly buy signal, that had a couple-day pullback, and that's what I'm going to be running my scans for. And the scans in which I'll be looking for would be this scan right there on the person's indicator, buy signal number 1. What does that represent? Exactly what we're talking about. I want to buy any stock that's in a daily buy mode while it's been in a weekly buy mode, even after this week's decline. So let's take a look at what we ran our scans on this morning. Again, yesterday or every day after the close. So if we do a webinar, my scans are running religiously. So yesterday, as you can see, we did have the scans run. So these are fresh signals. Let's take a look at the format here real quick together. And just so that we see what my criterias are. I've asked the computer to trade or to scan for trades in the NYSE, the NASDAQ 100, and the S&P 500. Could be overlap, but I want to take a look at the health and overall market in case we miss something and to see if is there a concentration of buy signals in any one particular sector. After yesterday's decline, you would think if anything generated a buy signal, maybe it was in earnings, maybe there was something, but if it wasn't and it started to get you start to see some buying setups, it would give you the inclination that perhaps we want to see if either A, that stock looks good technically speaking from a volume perspective, or B, if by today's close Friday we start to see more stocks in that sector start generating buy signals. So the first thing that I would say that would be noticeable for the very few stocks in that criteria, this means stocks that are in a weekly buy and these generated daily buys. So the first thing that I see is healthcare. Then I get this one little company down there, Groupon. The next thing we've got Five Below, Yoga Works, nothing that really Pandora Media in technology, nothing that really fired off any concentration. But some of these smaller cap, as you can see, and this is Passivity. I can't even pronounce the name. When you talk about small cap, it's a dollar stock, but it also had 7 million volume. That is pretty interesting. New Link Genetics, another small cap stock. So look at what we've asked the computer to run. Show me a weekly buy signal. At the market's pulled back. It's still in a weekly buy signal, but yet generates a daily buy. So this is one, and if you take a look, and let's examine this one little stock here. So the relative strength, the person's volume indicator, the histogram, all three. Let's look at these indicators, and what do these indicators represent? First, the person's market catcher represents the relative strength of this company's performance versus the S&P 500. This is the person histogram, which comes with everyone's lifetime. This is a momentum price indicator. This is a percent change indicator relative to the S&P. This is a price-based indicator, and this is a volume indicator. So we have condition, comparison, and momentum. And then, of course, we've got our longer-term signal with the weekly in a shorter-term buy signal. So this isn't, I mean, it's not a really sexy chart pattern by any stretch of the imagination. If anything, it's in a little trading range. But when you look at stuff in past times when it has had these like upside moves with relative strength and the momentum and volume, it has had past little pops. So we have a very similar pattern developing right now for this particular company, NLNK. So that's the symbol, NLLK. So we would be watching that. But this is the kind of thought process that I'm looking for going into this week. I think that overall, if we take a look at other stocks. Now, yesterday, let's look at buy signal number 4. As you can see, it says a daily buy signal, no filter. What does that mean? I just want to know how many stocks in the universe that I've asked to scan, and again, format this, and I'm not overlaying NASDAQ 100 because I'm going with NASDAQ, NICE, and S&P 500, okay? So when I look at the format there, I want to know how many stocks just generated buy signals. So let me do this. I'm going to remove this column, which is just the volume. I don't really need that right this second. So I just click on remove column, and I removed it. I didn't want to remove that column. Darn it. I removed one too many, but that's all right. Go back to format column. I can get it back and just hit add, and it is back in play. All right, what was that column? The description, the name of the company. So I can see the symbols, and sometimes what I like to look, if you see the sector is blank, that means it's either a fund, it's a preferred stock, and as you can see, a lot of this is all preferred stock. As we scroll down, ironically, this scan, just to make sure it ran last night, nothing happened. There it is. So it did run yesterday, so that's great. So Pandora showed up naturally. Yoga Works, 5 below. I mean, these are, whatever the criteria are, they're still going to show up. But this just shows us maybe there was a buy setup and a concentration of buy signals in a particular sector of the market, and that helps give us an edge as to maybe what's coming into the market, who was buying. Obviously, if the market dips and everyone's thinking the market's going to crash, guess what? Someone out there, for everyone's misery, someone else has a buying opportunity. So we want to find out is this market really declined? Is it a real sell signal? Was there should we be liquidating, or should we be buying the dip in certain sectors? In my opinion is we should be buying the dip in certain sectors. I don't have a whole lot of anything that populated yesterday. Madison Square Garden populated a little daily buy signal. It's been in a weekly buy mode. The relative strength's weakening. I wouldn't consider that one. But as we go into looking at some of these names in the healthcare sector, again, it's all like small cap stuff. So here's another company, whoever these guys are, Eiger Biopharmaceutical. You can see it's been in a weekly buy. The relative strengths outperform the overall market because the market's gone down and this thing's gone up. And someone bought it yesterday, and it has what we call a last conditional change breakout. So that right there has consideration for maybe some upside on Friday going into next week. You could see Stitch Fix. Stitch Fix is, I've seen a commercial for these guys. So it's an online, I think, relatively new company that's come on the scene. And you know what? It seems that a lot of these companies, they get some traction, they build up a business, and someone buys them out. So this is probably a takeover candidate one of these days. It's a relatively new company. I don't have enough information on it to give a relative strength on a higher time frame or get volume readings on it. But based on yesterday's performance, just on the daily analysis, this is a company I would wait to see if it closed over that line in the sand. This is Stitch Fix. I would wait for it to close over that line in the sand, and that would be above the last conditional change and resistance. And I would say that we have a shot for some upside. Now, my volume indicator, the liquidation to the downside was on pretty heavy volume. So we are starting to see the momentum. Let's zoom this up. So if you're looking for short-term little stocks, this is what populated on the screen. And we can take a look at this. So as new companies, it's kind of hard to gauge what they'll do. But I think in the clothing retail space, it might do. We'll wait for the pixating to from the projection to come clearer. So that should be on everyone's radars. Everyone should be seeing this projection right now. It looks like a trading range. I mean, until we close below these white lines in the sand, these are very strong, major support lines in the sand. So a close below these lines. So out of this whole time, since December, in January, in February, it formed this nice, strong base in the market. And if this is a trading range, and it seems to follow, when the market peaked out and went into dive mode, it did too. When the market went into recovery, it did too. When the market went into dive mode, it did too. So if the market recovers, perhaps we get a launch. Relative strength starting to improve, because this stock went up yesterday while the stock market, well, we all know, went down sharply. So this, I mean, in the retail apparel space, we have to take a look a little bit more. It's a new company, like I said. It's an IPO'd, but it also might present some potential upside moving forward. It's not a lot in that space that I generated, so that's why I say, trying to pick through decent buying opportunities on a day like yesterday. What we're looking to do is to look for strength in numbers, and if we get more and more buy signals in retail apparel. So did retail apparel get liquidated yesterday? Was it an awful day? So I'm going to remove the volume so we can shore up and take a look. What did yesterday's sell signals, what was the heavy concentration? And a lot of you already know the answer, so hold on a second. Let me format these columns right here. And I want to make sure that we have our sector next to the description so you can recognize some of the names. All right, so now we're back into focus. And basic materials. Oh, man. I mean, the XLB, as we were pointing out, was just ugly. So you name it, basic materials. This is sell signal number 4. What this represents is just show me how many PPS sell signals generated yesterday daily. And as you can see, basic material was pretty strong concentration. Capital goods, which would be representative between industrials like a Boeing, a Cummins. This is how TradeStation lists theirs. They don't list it as subsector specific as some traders would like, but they do a pretty good job at it. Fluor had a pretty ugly day, and here's what I'm not looking at: a weekly sell mode with a daily sell mode. If we get a weekly buy and a daily buy, that's what I'm looking for. So this is one I would probably avoid coming into next week. So we're just going down and looking at consumer cyclicals. Want to stick to this. Yesterday and all week we had, coming into the week, the SLX, which we warned about in the weekly thoughts and observations. It was in not only a weekly sell, it formed a low close doji, and bang, it got smacked down. Did it get smacked down enough? I'm not sure. I'm a big believer of the steel sector right now because of this monthly low close doji possibility. Now, I don't know if we're going to go straight down, but we could see a bounce back up in April and chop around. I think if it is a top pattern, let's face it, the steel sector's had an amazing run for the last few years. There's your run to the upside. We have to be weary and leery of that kind of situation or this type of situation. And I think this is probably the pattern where we went back and forth, back and forth, back and forth. That's kind of what we should more likely encounter over the next couple months before maybe this trend breaks out or reverses course. So I'm not really thinking to do anything in the steel sector other than trading opportunities back and forth moving forward until the market or technical conditions change. But what I was looking for was to see, are we getting a lot of retail? Did you get a lot of retail names of sell signals? And you'll notice yesterday, Monster Beverage is not a clothing company. U.S. Food Holding Company is still in a, this is one here, U.S. Food Holding Company. And the news today is that Target's going to try to acquire Kroger's. But here's a weekly buy. And if this thing flopped back into a daily buy to go with the dominant trend and the longer-term uptrend, if the relative strength and it's still positive because it's blue, if this thing popped into a daily buy, I mean, that would be a contention, and that's the criteria I'm looking to be a buyer on at this pullback in here. Monster Beverage looks a little ugly. It had a weekly sell signal. Man, it needs to show me a reversal of momentum before I get in it. So what's the point I'm trying to make? How many clothing and retail stores do we see that generated daily fresh sell signals yesterday? Not much. So that would be one area. So that would be perhaps the XRT sector might be one that we see recovery in as we get into the end of this quarter is in a week, and then we got earnings season. And Easter came into the end of the first quarter. So we might get a lot of increased retail sales in some of these, and I think that's the speculation we want to focus in on. So you look at a company like a Macy's, which Macy's did this. It's in a weekly buy. It barely sold off yesterday, right? So I would be, the relative strength is still outperforming the market at $28 or so. We'll see where this ends up today. But if we flop into a PPS buy signal, look at the weekly relative strength, the person's market catcher, the weekly volume action. I would say Macy's might be ready for getting an upside move. So that would be one consideration in the retail space. Ralph Lauren, ahead of earnings. It's in a sell signal on a weekly basis. It had a real ugly downturn in the market, so I'd probably avoid Ralph Lauren, but I'm going to run these scans at the end of the week. But, when you take a look at TGT and Target, it's in a weekly sell. It had a daily sell. Let's take a look at one that I think, BURL, Burlington Coat Factory. I mean, obviously it's outperformed the market. In fact, it barely budged in yesterday's downside move. So relative to the overall market, this is an outperformer. Is it a good risk-reward ratio? Buying up here? I don't think so. So I'm going to be looking for opportunities. There's little things that we need to pay attention to. Markets that have good risk-reward opportunities and trades that look like they can continue further. These aren't the only names in that space, but I'm just giving you an example of what we really did see. In yesterday's decline, most of the decline came in the form of the financials, whether it was the KRE, regional banks, small sector. That's what happened to the regional banks. When you look at the insurers, the KIE, they also had a kind of a bad day. So that's what's represented on yesterday's decline was the financials. The media, if you listen to the media, they said, oh, it's a trade war. President Trump's sparking a trade war. Well, why don't they report China's been screwing Americans for years? My own books, my own trading courses get consumed and get sold over in China. And there is no laws to protect against copyright. So software companies, it is a disadvantage. I don't think we're going to stop a trade war because we're their client. But I think there's a negotiation on the table. So headline news versus what's really happening in the market might be two different things. And the market's vulnerable for these declines. We have to think smart, and we have to use the market analysis to show us factually what the market condition or the undertone of the market is. And right now, I think that consumers, there's a couple sectors that have gotten no respect this year, and we've actually nibbled on a few stocks and made money because we've been liquidating on rallies and trailing stops. And one of those sectors you will know would be in the consumer staple sector. And here's the consumer staple sector. This last week, man, it just got hammered. So how hammered, you ask? Well, it came up against that shelf of old resistance, and now it's coming into a old resistance, new support type of situation. So I think moving forward, we might find some opportunities in some more of the consumer staple sector stocks. Not too sexy, but yet I think it's got a turn, and especially looking from a seasonal perspective, here's or even technically speaking, how bad did it get walloped? You look at this chart and you go, wow, that's just ugly. How ugly? Well, it took out the lows. It certainly did. It took out that low. It took out that low. So consumer staple-wise, it really performed ugly. However, the relative strength of the market shows while, yes, it went down, it didn't go down with enough strength to maybe see continued weakness. The relative strength's improving. So I'm going to be hunting for stocks because the sector here may be oversold and may be ripe for a seasonal regression and a seasonal upswing in the marketplace. So that would be a couple things there. We've already discussed about retail. What about technology? I mean, technology rules the roost. We actually looked at this in the XLK, the technology-based sector, and started to note that the volume, the person's relative strength indicator, and the momentum indicator was weakening as the XLK had that low close doji. And then last week, if you notice the weekly thoughts and observation, that's why I was more inclined to be a seller of or take inverse positions in the ETFs on XLK. Also on the semiconductors, let's take one more look, SMH. You know, from a seasonal perspective, this is like the worst time of the year, and I'm not sure that semis are going to be the black gold of life, but we seem to be losing the relative strength. The momentum of the market was declining, and so was the volume. So I'm more apt to see what I think is going to be a sector rotation. I don't know if the stock is going to go, or this segment of the market is going to crash and burn and go to zero, but I think it is. It has a chance over time going into the April-May period, a chance to see some more downside action, and upside should be limited. How limited? Well, the longer-term analysis isn't showing aggressive volume action, and so when you get the market when it makes these newer highs, like it did over here, and the volume action shows bearish divergence on a longer-term scale monthly. You know, it sees downside. It doesn't really go anywhere, but it doesn't tell you to be long and have a lot of upside potential there. And as you can see clearly on this volume indicator and also the price momentum indicator longer term, it's starting to wane and weaken. So look at the histogram component. So longer term, technically speaking, I'm not looking for the market to crash and burn. That's not what I'm looking for. What I'm looking for is more two-sided trade, and just maybe if you're an option trader selling every time it rallies some upside call premium or some downside. What we talked about here was a out-of-the-money diagonal put spread, selling the Aprils and being long the Mays and trying to capture that longer-term seasonality. I think we'll more than likely see the market, and I don't think it's unrealistic to expect the market to get back into, where its normal range has been here for the last few months, which would be right in the upper to mid 90s on that ETF. So anyway, that's my little look-see as to what the condition of the market is. And of course, using breadth analysis, can the Russell bounce back? Well, we will take a look at the weekly analysis, and I want to do that right now because I still think that we have, this is just a relative pattern on the weekly breadth of the market. it has a breakout pattern. It hasn't gone down. Again, we won't find out until today's close. But I do feel that the Russell, being in a IWM, still a weekly buy, and it's holding against longer term support, we have a shot at the market in the small cap to jump up to back to the upside. So I'm not ruling that out. This has been kind of a difficult market for some to handicap, and I think the indicators and the tools in which we use have done a fantastic job. At least some of you would agree. We did buy on Monday IWM calls. We did liquidate on Wednesday. We were looking for the market to come down, only certain segments of the market. And this is one of those environments where this is a very sophisticated sector rotational environment, and I think it confuses a lot of new investors. They don't know, should I be in, should I be out? Because what we see is rotation from one sector to another, and that's where this indicator and all of this blinking stuff can help us, and at least help us to avoid the landmine. So again, for this week, I want to avoid stuff that is dark red. I want to avoid, that would be materials, metals and mining, steel sector. The person market catcher is bright red. Stuff that's starting to improve is the fuchsia colored. So some material sector stocks. XRT, didn't we just discuss XRT? XRT is starting to show relative strength improvement. And here it is. The XRT is showing relative strength improvement. So even after yesterday's decline, I would be focusing in on stocks in the XRT space going forward for this week, and that's what I think we could see. Now, I'm not saying home builders, but Culp and Leggett and Platt, they've had some really bad performance, and this is a furniture company, but I mean, this might be a longer-term holding. I would revisit this stock if we generated a buy signal and broke out of these areas of resistance. But other than that, gang, I think we got to be kind of real selective in what we look to buy. The other day we mentioned about Home Depot in the trading room here, and Home Depot is just sitting against this longer-term support. Here's the longer-term support. Look at the relative strength. It's starting to improve. Volume didn't kick up into high gear. And last but not least, we don't have a buy signal. So I would be more prone to be a buyer if it broke out above my last conditional change, which are these gray lines in the sand right there, the gray line. So if we got to close, I mean, obviously it's not going down, right? It's not going relative to the overall market. That's why the relative strength, it looks better. But it hasn't fired off a buy signal, and it's not fired off a true trigger on either relative strength or my volume indicator or a PPS. And that's what I would be waiting for before I maybe got a look-see at a Home Depot. But it's on my radar screen. Last but not least, let me scroll down. Besides energy, we have a small exposure with energy in National Oil Well Varco. I would absolutely be, without a doubt, entertaining adding to the position in energy, and I think I stated that in last night's video. First and foremost, I would look at anything that is blue with the green moving average in relative strength, and that would be Occidental Petroleum. Occidental looks on a daily basis. You'd go, well, John, it had this big breakout the other day. Why would you buy a big breakout? What we talked about in the room was big breakouts. We would pray for a pullback to the midpoint. And yesterday, gang, it's exactly what happened. We covered this exact stock yesterday in the trading room. So at this point in time, we do have what we call high close doji on a daily basis. And you say, well, it had a big breakout. That was an opportunity yesterday. You might get a shot at around 65.70, right? To enter lightly some more positions. I mean, it could only, go back up and retest the highs now that crude oil is over $64. But Hess, there's a few names in here that I would be paying attention from relative strength. And lastly, let's take a look at the biotech, because usually even though it's got bad rap this week because of President Trump's and the administration's desire to get fair prices on drugs. I mean, you literally go to Mexico, go to South America, go to Europe, go to Spain, wherever you go, and medicine is like ridiculously inexpensive. And I mean, ridiculously inexpensive. And so with that stated, why are Americans paying so much and everyone else doesn't? I mean, it doesn't make sense. So the man has an idea that, hey guys, wake up, this isn't quite fair. But a company has the right to charge what they want to charge. That's freedom of capitalism. But why would you charge one country an exorbitant amount and other countries a different amount for the same product? That makes no sense. But needless to say, what I wanted to focus in on is some of the healthcare and drug stocks, because they did get beaten up. And you will notice here today they're up marginally, but let's look at the market internals. They're all flashing weekly sell signals. El no goodo, muy malo. Don't want to join that party. And then in the biotech sector, I want to start focusing on our stocks starting to improve. So what I would be looking for in some of these cases, looking for the relative strength to see some improvement before looking at buy setups. They're all in weeks. Most of them are weekly sell. But here's some names in the biotech sector that are in weekly buy mode, or at least the weekly trend is up, meaning the person's pivot. I want to look to see if maybe we change, and when we start to see more daily buy signals, check out Mylan, Insight, the overall IBB sector is still blue, but it's outperforming the market because it fell less. It didn't lose as much in terms of percentage. Regeneron, I mean, you can see, I want you to focus on the when I click on these stocks, I want you to focus on the daily chart and also the weekly chart. You can get a good gauge. Would you be buying any of this stuff right now? Even though Clovis Oncology has a outperformance, it's blue. It's in a sell signal. So what I want to see is I want to see the market break out in some of these names or close greater than resistance and generate a nice volume pattern. That's what I'm kind of looking for, and we don't have that yet. So the word or term stalk comes to mind for a lot of folks. So that's what I'm looking for. The transport sector, we had a nice trade, and probably the one of the airlines that I would never personally want to take, and it was, believe it or not, Spirit Airlines. And this is where we made the same kind of setup when I look for a buying opportunity. When the relative strength is improving, that fuchsia, and the volume is improving on my volume indicator, that's what I'm looking for upside. When we get upside and you get a nice little move and you're near maybe an older resistance level, take half off, trail your stop. And then what happens? You get stopped out and you're thankful that you get stopped out. So at this point, airline sector stocks is not until we get a change of guard and until we start to see, and this isn't even an airline, this is C.H. Robinson in logistics. So here's an interesting situation here. The relative strength, this does look appearing like it's getting ready for a breakout. The volume is strong. The relative strength is strong. It did not fall against the overall market yesterday. And now let's look at the longer term weekly analysis. Last but not least, the relative strength is fired off bright blue. The volume is upticking right now. As you can see, there's the uptick of the momentum of the volume on my indicator. And here's an interesting situation. We may form a high close doji. Last week was a doji. You close greater than that line in the sand, and it leads you to speculate you have a nice little short-term trade. Is this a bull flag, or is it just a market that's getting ready to test the highs? Either way, if it gives a breakout, it's in strong momentum mode right now, and you should see some follow-through to the upside. So for stock traders, these are kind of the things that we would be looking for to help us filter out trades going into next week and also at the end of the quarter. I hope you enjoyed this morning's fireside chat. And again, theme song for the day was from the Beatles. And again, have a great weekend, everybody. We'll see you Monday for the morning market briefing. And for my regular members, see you in the trading room for some day trade opportunities. Thank you.